The S&P 500, the Nasdaq 100, we quite a bit to talk about on the day. Now I'm going to go pretty much kind of in detail of expectations here on the indexes in particular. I've gone over stocks I've liked already, a little bit more of a fundamental viewpoint and things to expect over the next few weeks and things that I'll be on the lookout for. Now, the first thing I do want to go in detail about, not really wasting any time, is what was said on Friday, which I believe caused a little bit of the selling that happened, right? I've already given my opinion on any selling that we've seen and kind of the reaction that the market's taking from that. I've given my opinion on that. Until we make lower lows, I'm going to continue trading the upside. Lower, as you make higher lows and higher highs, you're bullish. That's just where we're at right now. But this was kind of what I slightly mentioned on Friday's video. Fed policymakers deliver hawkish vibe after the pause decision. And this was specifically Waller. Core inflation is not coming down like we would have thought. Inflation is not moving. Inflation is just not moving, and that's going to require probably more tightening to try to get that down. Now, we need to also understand that when they talk about tightening, that does not just mean what's happening with rates, as they've made very clear. They've made it clear that this is going to come in form of, raising, what's happening for consumers with credit, or what's happening across the board with what they're doing with, easing on the balance sheet, etc. They're still doing a lot of that selling. So it's important that as we look at some of this, that you're not in this area that the news is just fundamentally bullish. Like, I continue to say that, but I want to make that all the more clear. But the way that the market is interpreting most of this information is bullish. And I want to harp on the differences there. That inflation not moving, not going in the direction we want it to yet, as far as core inflation, is not good. We all understand. I got to break this down as simple as possible because some people just run with like crazy ideas and like theories, right? But what all that matters as a day trader is what's happening to equities, stocks, futures that you are trading, right? And so it's important that I'm able to disconnect what I believe should be happening and what is actually happening. Because once we can disconnect those two things, then I believe you open up the possibility of making money in this market, right? So we can go on and on and on, but I do want to say this was the bad news if there was. It's still not clear that the recent strains in the banking sector materially intensified the tightening or lending conditions, yada, yada, yada. So it goes, he explained all of his viewpoints there. Okay. He said with the underlying pace of price increases moving sideways. So again, when we look at the action of where we're at, we're dangerously close back to all-time highs. And this is why I continue to tell people to slow down before you get too bearish here. And I've been saying this since January, but, going to keep saying the same thing, right? The amount of time that it took us to go from these highs to the lows was around 10 months, maybe 11. The amount of time it really took us from the bottom, down here, from lows of 10.7 to back where we're at, 15.4, 15.5, 3-4 months. We'll say 5 months. We'll say 5 months. We'll be a little bit conservative, okay? So you take 5 months to get back here, half the time, and we're just pushing back up. So we need to understand that, and that buyers are becoming increasingly more aggressive. But it's still important to realize a few other areas of the market, like the Russell, right? The Russell was one of the big indicators over the past few weeks that told us about the breakout that was going to come. We talked a lot about it. We're above a lot of these key levels, above a lot of the big levels we've been watching, and we're at those levels or above them. The weekly 200, the daily 200, etc. Now you can see we are at that bit of a level. This was the bottom that we had back here in last January, right? And then we kind of mounted, pushed up, and then we got stuck below. So if we can start getting the Russell back above 19,000, 1920 roughly, I do believe in the path of upside. I still think it's there. And I think that will just signal another breakout, in my opinion. Okay, and again, this is just going through technicals right now. We look at the ES, clear breakout above 4,300. The rest was really easy. You're coming into some of your first areas of resistance, 14.93, 14.95. These are areas you expect to find turbulence. You expect to find some resistance, okay? But there's still no really aggressive sell-off, any aggressive sign of sellers. It's just, you're still just moving along, still trucking along, okay? So you still like the action that is taking place here. Now, before we go into anything else, I have to ask you to consider doing two things. Liking and subscribing helps out tremendously. Every single day here on the channel, we make videos for you so you stay prepared and you understand either the news, fundamentals, technicals, breakouts, anything that you may miss along the way. We try to cover those every single day. If you are interested, the Discord link is down below. I don't recommend this to newer traders. I recommend people that understand options, the premise of everything, and then to like tweak and get better at what you're doing, right? That's what I think this is for. Yes, there are trade ideas and things that we're posting in there as well, but this is not a signals Discord to where you're going to follow trades and get rich by any means. That is not the goal. It's an area for over 900, almost 1,000 current members right now to feed off of each other, understand what we're doing, why we're doing it, and consistently getting better and better and better. That's the goal. That is the mission of Option Drops and our Discord specifically. Also, too, the interactive brokers link is down below. Everyone's always asking me, where do I trade? How do I trade? This is the broker I use. They're the best broker that I've used so far, above Thinkorswim, above Webull, Robinhood, anything and everything that I've used so far. They've been the number one trader for me. And it's really coming down to the fills that I'm getting on all my trades, specifically with day trading options. And then also, too, if you do have cash just sitting in your account, you do get a pretty decent rate, and you're still growing money no matter what, which I do love. But again, that link is down below, so check them out if you are interested. Now, going into this week, again, you're going to have some Fed members talking here and there, and I think it's important that when Fed members talk that we pay attention to things they're saying. Because despite Waller saying some pretty... it was hawkish, it was bearish statements, I didn't see the strength from sellers. Okay, and I'm going to continue to say this, and people like get mad when I say this, but you know, this move here wasn't that great to the downside. All things considered, like on ES specifically, you had a lot of room to start pushing down. You did not have that much support established here. Okay, understand that, right? You're just holding up as we speak. Like you push through lows on the day, you push down and you just held up. And this is the same type of behavior that we were seeing back here, to where you would see some sell off, but sellers wouldn't follow through. You'd kind of chop and then pop back up. But so when we're going to this market, what I'm waiting for is to see, do buyers start showing back up with volume? And when we start getting that volume back to the buy side, obviously I'm pivoting back into areas of the market that I like. I mentioned Google, Amazon. I've mentioned quite a bit, but the ones that are at the top of my list right now, AMD, Google, Amazon, those are like my favorites right now. I'm also moving over into some of the banking sector as well that I think has a lot of potential. One of the stocks I liked a lot last week was Baba. And I mentioned this vaguely, but you remember I posted this also in Discord if you're paying attention. You had the ascending triangle forming out basically 87. You gapped up. You got above the 200 SMA. Then you pushed up to 93, 94. Now this week, some of the big ones are liking. JP Morgan, this one was posted on Twitter as well. This thing looks really crazy. You got to definitely be a fan of this one. You can see here, like in the 4-hour or the daily time frame, the ascending triangle that's forming out here. You break and hold 144.4, 144 flat. I do believe you have a lot of potential moves to the upside. I will say that. You're going to get pretty illiquid into 148, possibly 150. But I do think you have upside all the way, maybe even into 156. But 148, 150 for target number one above 144. Keep them on your radar. There's not a lot of the other ones that I'm as big of a fan of. You know, obviously I like Charles Schwab long term. I like some of these other names. But JPM looks like it has the most potential upside in the short term, and it definitely looks the most bullish. Now, another thing I want to talk about, some of the mid caps that we've seen, and I'm just kind of going over broad markets and things that I'm watching in general, because that are giving me different views on the market right now. Now, and I've been like, I haven't done a lot of trading on the mid caps, but I've been watching them pretty religiously. Now, Square is one of my favorite mid cap names that's out there. One thing I like, you continue to bounce from this weekly demand. If you go to the weekly time frame, you can see a demand form down here, but you bounce once again here. But not only on that, you get a bull flag here on the daily time frame, and then you're mounting this to end the week on Friday, which again I love. And you're gonna see more of this happening on, you know, smaller / mid cap names. Roblox looks really good as well, trying to push up right now. Obviously, I'm not like a Roblox fanatic, and I would argue you have a little bit of a inverted head and shoulders here as well, right? You can see what's playing out here. I didn't even notice this already. You can see how that's playing out. You can see the neckline as well, right about there, trying to push up. Like, and you're gonna see, you go further in Shopify, it continues to push up. I can go to, you know, upstart, continuing to push up, right? You're seeing more and more of these names that were destroying it back, 2020, 2021. They're getting love, they're getting volume, getting flow. It's a good sign, right? This is a good sign of the market. Now, of course, here on the channel, the focus has been mega caps because that's been the best thing to trade. But as we actually come back into a bull market, these have a lot of opportunity. These have they're going to start catching my interest. Now, I'm not saying to focus on these quite yet, but I am saying the fact that we're seeing a risk-on mentality start to play out and we're starting to see these names get love tells me that a rotation is most likely just happening once again. Just like when we saw the Nasdaq dip, we had that rotation into Dow, into the Russell, and then guess what happened? Russell, Dow slowed down a little bit, and the Nasdaq went ballistic. It was like a missile straight out of North Korea that went straight up, but instead of this one didn't just blow up randomly in the Atlantic and was a failure. This one was a success. We went straight up, right? Should have been an Elon rocket. That's what this thing was. So that's what we kind of have playing out there. So understand just the behavior that's going on. Now, a little bit deeper too, looking at some of these bonds as well, the junk bonds we've been talking about. HYG, we talked about this the other day. Junk bonds are a great way to establish if you're seeing buying or risk on happening in the market. I will say you are at a pretty major inflection point here on junk bonds as well. JNK, HYG, pick your poison, whichever you want to use. You can see, obviously, we did get that breakout, the bump and run we're pushing up right now. Now, you could argue even more that your trend line should come out here and that this is like the real trend line of where you're at. And maybe this is. So you're going to have to take a little bit more time to see if we're going to get that breakout here on HYG and junk bonds. But if we start seeing the breakout happening there, again, it's just more and more excitement. Because in my opinion, we haven't even really seen junk bonds go ballistic like they did back here in January to when we got that really nice push that we had. And so it's important to see that some of these indicators are still kind of lagging. They're still kind of coiling, and they could really signify a big push to come pretty soon. We look at DXY, which I think is one of the best indicators of risk on versus risk off in the market. Everyone was saying DXY is going to break up. It's clearly still in a downtrend, but you have a descending triangle. You're pushing back down to support. I mean, it looks like you're going to drop down here again. Just going to say that right now. Yields, bonds, you saw yields start to go up once again on Sunday. This is the only area of the market that, in my opinion, is cloudy or showing any signs of possible downside on the market or risk off potentially, is what's happening with yields. But I still believe yields will come down. I think you're moving based on what some of the Fed was saying. But again, personal opinion, yields, you want to see them come down. So far, they are not really dropping. You also got a little bit of love on energy, but look where energy bounced once again at the 200 SMA on the weekly, which we continue to talk about. As you make lower lows here continually, lower highs and lower lows, I think you're at risk for getting a pretty nasty breakdown. So definitely keep it on your radar. Energy keeps going down. CPI, PPI, PCE will beat, and you'll have better inflation numbers. It's just a fact of the matter. Understand that. Last thing I want to talk about is what's happening here on Bitcoin. So we had that head and shoulders that played out here. You broke down, yada, yada, yada. Obviously, you didn't get all the way down to 24K. But you look like you're getting some love here. And if you don't remember from last week, we saw a lot of bad news around crypto, specifically because every crypto broker is being sued. Binance, Coinbase, all of them. The SEC is investigating everyone, which is a bad look for crypto. But then you saw they're adding a Bitcoin ETF. Bitcoin doesn't look bad. And as long as the market's going up, I think Bitcoin will follow the market. I'm not saying to YOLO or hammer Bitcoin or put all your money into crypto, but you don't look bad. You're trying to reclaim the 200 SMA on the weekly. You're trying to push back up. It doesn't look terrible. It doesn't look that awful. I'm keeping my eye on Bitcoin. I definitely think it has room to the upside. You could start seeing names like Coinbase possibly getting a recovery as well. But again, be careful. These are way more risky assets. So don't just start throwing your money into these. I don't think these have the most risk out of everything right now that I've talked about. But overall, that's my opinion. Someone did comment on the video yesterday or on Friday and said they think that money is flowing out of semiconductors. Do what you got to do. But, people said the same thing when you were dipping right here and then you bounce up and made new all-time highs on NVIDIA. AVGO, the same thing. I still love some of these semis. Obviously, the ones I like, I'm liking AMD a lot more here. I have some QCOM stock. These are the names that have been treating me very well. But that's kind of my focus right now. I'm not trying to buy things at all-time highs or get, push my luck to the upside. But I still believe betting against semiconductors in the midst of the AI roar and, These semiconductors are the foundation of all things AI and all things with the future of technology. I think you're crazy to bet against them right now. Personal opinion. But yep, that's everything I'm looking at. If you have questions, comment down below. More will be coming out. Have a video coming out for you tomorrow. Have a good one, traders.